So CPI numbers came back great. The Dow, it's up. Bitcoin, heading in the right direction finally, am I right? This narrative that inflation is going down and everything's gonna get fixed and the Fed's gonna pivot, we're all gonna be rich again. Well, there's a group of people out there that may disagree. Let's get it. Welcome to BitBoy Crypto. My name is Ben. Today, we're gonna be taking a look at what are the biggest companies, the institutions, what are they doing right now that you should be paying attention to? We're getting the news, inflation is down, the Dow is up. We're gonna get into that and find out, I don't know, is this a good time for the market to turn around or are we in for more pain? So let's go ahead and check out the CPI and the Dow.
The market is showing here, we sold off a little bit, but the market, it was right in line with expectations. And that's down 0.1%. 6 months ago, when CPI was up over 1% on a month-over-month basis, no one would have ever thought we'd be looking at a minus 0.1% CPI for the month of December. So I think that's an encouraging. If you saw CPI even crashing further, that wouldn't be a positive signal. That would be a sign that the economy is doing really weak. Only 4% of CPI readings throughout history since 1950 have been less than minus 0.1. So that would be a pretty ominous signal, I think, if you did see a very weak reading there. And I think
but it sounds like you're suggesting that actually things are weaker today than these numbers are suggesting. And then the question is that good or bad news in this sort of perverse, what does the Fed do about it situation?
Right. So, I think the Fed really should start to, look at some of these indicators a little more closely. The fact is, every day that goes by, we see another indicator suggesting that the economy is weaker rather than stronger. The only thing holding things up seems to be the employment picture is holding in.
Smoke and mirrors. That's what we're looking at. The CPI numbers have come back, and it looks like inflation is cooling. We got the Dow climbing more than 200 points. The December report showed a 1% dip in prices from November, but was still 6.5% higher than the previous year. In November, the report showed a 0.1% monthly gain and an annual pace of 7.1%. Stocks rallied in recent sessions as investors bet on the CPI report to confirm a weakening inflation record, which it did. However, you heard him talk about that negative CPI number. It's only been 4% of the times in history it's been negative, and it's negative right now. And that usually means the economy is actually not that strong. So then we've got our December jobs report here. Unemployment, average wages, you guys can see, came in lower. That's not good. That means we're probably we are in a recession. December jobs report, payroll rise by 223,000, unemployment rate falls to 3.5%. This was published on Friday last week. December's job report, last read on job growth in 2022, showed the labor market remained strong at the end of the year, even as the Federal Reserve raised interest rates to the highest level in 15 years. So we're seeing inflation go down, we're seeing the rates go up, and yet somehow, as much financial turmoil as that's putting on all these businesses, not all of them are laying off yet. Some are running pretty strong. You gotta ask yourself why. The unemployment rate in December fell to 3.5%. The unemployment rate came in at 3.468%, the lowest since 1969. Check this out. This is jobs added losses January, the year of the pandemic. You guys can see what happened there. The unemployment rate has gone down quite significantly. Extremely low numbers right here. Headline employment gains have slowed in recent months, but hiring remains robust despite the Fed's efforts to tamp down a strong labor market. That has placed upward pressure on wages and contributed to stubborn inflation. Indeed, expectations for a soft landing in the economy have likely been boosted in light of today's job report. So we think a soft landing is coming. Guys, there already is not a soft landing. Jerome Powell has known that for a long time. Guys, the same way they're saying smoke and mirrors is a sign that the economy is not as strong as they say it is. That's exactly what they do with the language around the Fed and a recession. Not a recession. 90% of our YouTube viewers on a poll said we're in a recession. Guys, if it walks like a duck, quacks like a duck, then most likely it's a duck. All right, here we go. Cooler inflation mixed with strong labor data leaves traders puzzled. Okay, here we go. We got inflation data. Slowed in December as widely expected, but labor market data remains strong with both initial and continuing claims coming in lower than expected, Wall Street struggled to weigh how each would affect future rate hikes decisions for the Federal Reserve. Here you can see the stocks wavering on the news of the CPI report that was earlier on Thursday. And when you poke under the hood a little more, it's clear a lot of the movement is down to falling prices at the pump. These are inflation numbers. So they're saying is the inflation numbers aren't actually as good as you think they are. It's just that gas prices have gone down, and that affects the way that people view inflation. Because obviously, if the price goes down of gas, it might look like that's due to the economy, but that's due to the oil companies. Lowering the price per barrel has nothing to do with inflation. Rents went up month over month. Shelter still remained high. People are struggling to find housing right now. DirecTV is the latest pay TV company to lay off staff amid the ongoing shift to streaming. So a major company, DirecTV, they are going to be laying off 10% of its management staff here. Layoffs are expected to be in effect next Friday. Alphabet jobs, well, they're getting cut as well. Why? Because they're invested in robots. Less than a month ago, Alphabet's industrial robotics subsidiary, Intrinsic, said it acquired a team of people from a software development firm called Open Robotics. On Wednesday, Intrinsic went in the other direction by laying 40 workers off. So what is going on here? We have Google. Alphabet is Google, if you didn't know. At times when ChatGPT is going insane in users, and they're laying people off at their robotics. Very, very, very interesting. Why Salesforce layoffs may actually be a problem for the stock. In wake of Salesforce's massive layoffs announcement last week, Wall Street may have overlooked one key element in its haste to predict better profit margins from the tech giant. I've been thinking a lot about how we came to this moment. Benioff said in a letter to employees, as our revenue accelerated through the pandemic, we hired too many people. Leading into this economic downturn we're now facing, and I take responsibility for that. Then we also have, of course, Coinbase. We talked about this extensively this week on the live stream. Make sure you subscribe. Check out our live stream every day, 11:30 a.m. Eastern Standard Time. Coinbase layoffs show banks still offer subpar severance. So what's going on here? You got Coinbase, crypto company, at the bottom of the bear market, laying people off. Why are they doing that? Well, could it be they're trying to save money to accumulate more assets? Is suddenly the floodgates have opened in the world of exchanges, and FTX is no longer a competitor. Coinbase, once again, may be in the position to be the number one competitor to Binance. But check this out. They're also offering low severance. Once again, trying to save money. Ryan Selkis, I wouldn't be surprised to see Coinbase as a hostile takeover target by a big bank in 2023. I hope it doesn't happen, but with the debt at 15% yield and the decline below 10 billion in market cap, it will cost Jamie Dimon about 5% of his JM stock to buy the market world leader outright. Now, very interesting because we saw the reports earlier in December about Coinbase and their balance sheet and how much money they have as a company. There's not that much. There's a ton of people that could come in and just buy Coinbase. Are we going to see a bank buy Coinbase? Well, that's a great question. Speaking of banks, we'll come back to that question. Goldman Sachs cut investment banking global markets hard source. Ton of layoffs there. I think they hired 3,200 people. Continuing to trim down. Now, could it be that they're trimming down to buy Coinbase? Just saying. I don't know if it'll happen, but man, what a good candidate to ruin everything. So look at this. BlackRock plans to cut 500 jobs worldwide following 2022 sell-off. The world's largest asset manager has shed staff as the industry braces for 2023. The move reflects the period of reckoning that 2023 could represent for many global asset managers, which are being forced to cut costs and make hard decisions about where to invest for growth. So here we go. We have it laid out here. Where to invest for growth. What is down that we could buy? I also have this. BlackRock just recently adds Bitcoin exposure for its retail and institutional investors. One reason why they're clearing money off the books. And what a better way to do that than to take over as the Coinbase custodian. The BlackRock Global Allocation Fund now provides exposure to Bitcoin for regular and passive investors. The $15 trillion in assets the BlackRock Global Allocation Fund manage should increase with the inclusion of Bitcoin. Here you can see the global asset universe, pretty interesting. I mean, Bitcoin way down here at 0.37 trillion. $370 billion. Look up here at real estate, $258 trillion. Start digging in a little bit more into BlackRock and you'll find they issued a $17 million loan to bankrupt Bitcoin miner Core Scientific. Remember last week? We told you. BlackRock is coming for Bitcoin mining. They're accumulating. They could be positioning themselves to buy Coinbase. BlackRock buy Coinbase. See what they're doing with loans. See what they're doing with laying off people to create more income on their balance sheets. Looks like to me, BlackRock is ready to come out of the shadows and become a major player in crypto. There's a lot of shadows going on in the world today. The jobs report, the stocks, the Dow Jones. But yet the real numbers show our economy's not quite as strong as people think it is right now. Does this mean we're going to get a lot more pain? Or does this mean that somehow they're just going to click that money printer back on before you know it? You know which one I think. Money printer go. Brrrr. That's all I got. Be blessed. Big boy out.